okay, the last time we started with the problem 730. We finished the first part of 730. Now let us continue with the same problem, problem 730, but the second part, or part number 2. Let us go through with the question or the given information. They gave us, according to the static budget, that the units produced and sold is 6,000 units. They gave us direct materials by the 72,000 pounds, I think, by the amount of, what is the cost of the direct materials? Dollars. The direct manufacturing labor, 21,000 hours. Correct? And the amount?
15,500 multiplied 51.5.
They gave us the whole number. It would be 1,952,000 and 750. These are the actual numbers. I'm talking about the static budget. The static budget, which is the budgeted amounts, not the actual amounts. The 6,000 is correct, but this number is the actual number for direct materials, and this is the actual number for the direct manufacturing labor. It would be 720,000. Excellent. $720,000. This is given. This is given in the question. $720,000, and the direct manufacturing labor would be 1,050,000. This is the same question the last time. The direct manufacturing labor is 1,050,000. Of course, according to the standard prices that they gave us, the direct materials would be $120 per unit. This is the standard cost of direct materials. And for the direct manufacturing labor, $175 per unit. And then they gave us the, of course, we have the fixed also. We have fixed expenses by the amount of 1,200,000. Now the actual, they gave us the direct materials, of course, according to 5,500 units. The direct material is 668,800. And the direct manufacturing labor, 952,750. Of course, the direct materials is according to the actual cost of how much? $9.5 per pound. And how many pounds were used? 70,400 pounds were used. The direct manufacturing labor, what is the cost per 1 hour? $51.5 per hour. How many hours were used? 18,500 hours. The fixed costs were $1,180,000. This is the information according to our question. Of course, in our first requirement, they required us to perform the variance or level 2 variance analysis. And we performed the variance 2 analysis or level 2 analysis according to the comparison between the static and the flexible budget in order to attain or in order to achieve the sales volume variance. And we compared the flexible budget with the actual in order to attain or achieve our flexible budget variance. Now, what is the second requirement? Price and the price variance and the efficiency variance. Therefore, we need to divide the flexible budget variance onto two variances, which is the price variance and the efficiency variance. Of course, we know that the price variance, we could achieve the price variance, or we could attain the price variance, or we could calculate the price variance according to the comparison between the budgeted price and the actual price, while as the efficiency variance would be attained or calculated according to the comparison between the budgeted and actual quantity. Therefore, we need to perform now the level 3 analysis. And according to our level 3 analysis, we are going to start with the actual costs, which is the actual quantity multiplied by the actual price. Now the second column would be the actual quantity multiplied by the budgeted price. Therefore, the difference here between column 1 and column 2 is only according to the price. The difference between these two would be solely because of the actual, or the difference between the actual and budgeted price. Now, we are going to consider the flexible budget, which is the budgeted quantity, of course, for the actual output multiplied by the budgeted price. Of course, the actual is already determined, as we can see here, from our question itself. This amount is given from the question that we have an actual cost of direct materials by the amount of $668,800. Therefore, this would be the amount, $668,800. Of course, if they didn't give us the actual number, we could calculate the number according to the $9.5 per pound and the 70,400 pounds that were used. The 9.5 multiplied by 70,400 is the amount or the cost of the direct materials by the amount of 668,800. Therefore, even if the question didn't give us the actual amount and they gave us the quantity and the price, we could multiply the quantity with the price in order to get that cost. Now, the actual quantity multiplied by the budgeted price. Of course, the actual quantity, as we can see here, is the 70,400 pounds. We use 70,400 pounds. This is the actual quantity. But according to our price, what was the price according to our example? 120 is the cost of the direct materials per unit. Therefore, it was $10 per pound. Therefore, the actual quantity is 70,400 which is given, multiplied by the budgeted price, $10 per pound, which is also given. As we can see here, the amounts are given. The budgeted price is given in the question, and the actual quantity is also given in the question. Therefore, 70,400 multiplied by 10, it would be $704,000. Now, the budgeted quantity, of course, according to our quantity, we should have used how much according to our example? Here, we produced an actual amount of 5,500 units. Therefore, the flexible budget here, or the budgeted quantity, should be for the 5,500 units. But we need to know what is the standard quantity to be used per unit. And it is given 12 pounds per unit. Therefore, according to our question, they said that each unit should use up 12 pounds, and of course the cost of the pound is $10. Therefore, according to our flexible budget, in order to produce 5,500 units, each unit should use up 12 pounds. Therefore, 5,500 multiplied by 12 pounds, it would be the amount of pounds that should be used in our manufacturing process according to our budget, according to our flexible budget. Any questions? Therefore, the budgeted quantity is 12 pounds per unit multiplied by the actual output of $5,500. Of course, the budgeted price is $10 per pound. Any questions? If you have any questions, please ask. As we can see here, we are talking about the budgeted quantity for the actual output. Never forget this. This is the flexible budget. Therefore, it should be prepared according to the budgeted prices and budgeted quantities per units, but for the actual number of units produced and sold. Therefore, the amount here would be $660,000. Therefore, as we can see here, we now know the actual quantity multiplied by the actual price. We know the actual quantity multiplied by the budgeted price. We know now the budgeted quantity for the actual output, of course, multiplied by the budgeted price. Now we can divide our flexible budget variance onto two variances, one which is the price variance and the other which is the efficiency variance. Now, as we can see here, we should have incurred $704,000. According to our budgeted price, as we can see here, we should have incurred $704,000, but we actually incurred $668,800, which is less. Therefore, this is a favorable variance. Of course, the difference between the two would be $35,200, which is the price variance. Of course, we need to designate that this variance analysis is for the direct materials in order not to confuse our analysis for the direct materials with the direct manufacturing labor. Now, we need to compare the flexible budget, which is the budgeted quantity multiplied by the budgeted price, by the actual quantity multiplied by the budgeted price. Therefore, as we can see here, we should have incurred $660,000, but instead we incurred 704,000 because of the increase in quantity. Therefore, this is an unfavorable variance. Of course, the difference between the two is $44,000, which is an efficiency variance. Of course, both the unfavorable and favorable variances would add up to the flexible budget variance. Of course, as we can see here, we have 44,000 unfavorable efficiency variance. We have 35,200 favorable price variance. We have the unfavorable more than the favorable. Therefore, we will have an unfavorable flexible budget variance. Of course, we have unfavorable and favorable. Therefore, we need to deduct each from each other. Therefore, it would be $8,800, which is the same amount that we calculated in our level 2 analysis. Any questions? Now, we need to perform the same analysis, which is the level 3 analysis, to the direct manufacturing labor. But before entering to this analysis, please, from our question, give us the amount of hours or the standard number of hours per unit and the price per hour according to our standard from the book. Therefore, 3.5 hours per unit is the standard quantity, and $50 per hour is the standard price or rate for each hour. Of course, as we can see, all this information is given. Therefore, we are not calculating anything new. We have this information according to our question. Now, have you finished from this? Therefore, in order to perform the direct manufacturing labor, level 3 analysis, we need first of all to have the actual costs. And according to our question, they gave us the actual cost to be $952,750 by using 18,500 actual hours and the price or a rate of $51.5 per hour. This is according to the question. Therefore, the actual cost would be $952,750. The actual quantity, as we can see here, is 18,500 multiplied by the budgeted price, also as we can see from the question, is $50 per hour. Therefore, 18,500 multiplied by 50, $925,000. Now, the budgeted quantity is for the actual output of 5,500 units multiplied by the standard quantity per unit, which is 3.5 hours per unit. This is, or this would be, the budgeted quantity multiplied now by the budgeted price according to our question, $50 per hour. Therefore, the flexible budget amount would be $962,500. As we can see here, we have our three numbers that we are going to use in order to calculate the price and efficiency variances. As we can see here, according to the actual or the budgeted price, we should have incurred only $925,000. While as the actual result says that we actually incurred $952,750, which is more than what we expected. Therefore, this is an unfavorable variance. The difference between the two is $27,750, which is the price or rate variance. Now, according to our flexible budget, the $962,500 is the cost that was expected to be incurred, but we have actually incurred, according to our actual quantity, the amount of $925,000, which is less. Therefore, this would be a favorable variance. The difference between the $962,500 and the $925,000 is $37,500, which is the efficiency variance. Of course, according to our level 2 analysis, we have a flexible budget variance, which is, of course, as we can see here, 37,500 is more than the 27,750. Therefore, the flexible budget variance would be a favorable variance. Now, because we have unfavorable and favorable, we need to deduct these two numbers. Therefore, $9,750 is the flexible budget variance, according to our level 2 analysis. This is the same number that we calculated from requirement number 1, according to our level 2 analysis. Now, as we can see here, the 9,750 is now divided into an efficiency variance by the amount of 37,500 and the amount of 27,750 as a price or rate variance. Any questions? Any questions? All clear? As we can see, that problem 730 assumed the same assumptions that we took according to our example or web company example, correct? We assumed that the amount purchased of direct materials were the same amount used in the manufacturing process. But what if there is no such assumption? What if we purchased an amount that is different than the amount that is used within the manufacturing process? Therefore, let us see how we are going to perform our analysis according or without the assumption that we do not have any ending direct materials inventory. Open your books on problem 734. Problem 734. Who would like to read?
Material cost variance. Use of variance for performance evaluation. Patrice Stanley is the owner of Fisher Bikes, a company that produces high-quality cross-country bicycles. Fisher Bikes participate in a supply chain that consists of suppliers, manufacturers, distributors, and allied bicycle shop. For several years, Better Bikes has purchased titanium from suppliers in the supply chain. Better bikes uses titanium for the bicycle frames because it's stronger and lighter than other metals and therefore increases the quality of the bicycle. Earlier this year, Better Bikes hired Michelle Scott, a recent graduate from State University, as purchasing manager. Michelle believed that he could reduce costs if he purchased titanium from an online marketplace at a lower price. Better Bikes established the following standard based upon the company's experience with previous suppliers. The standards are as follows. Cost of titanium 22 per pound, titanium used per bicycle.
The direct materials cost? Yes, the titanium, what is the cost? $22 per bike or per pound. Yes.
And titanium used per bicycle is
8 pounds per bike.
Actual results for the first month using the online supplier of titanium are as follows. Bicycles produced 800. Titanium purchased 8,400 bound for 159,600.
How much is the titanium purchased?
8,400.
8,400 pounds.
For the price is 159,000.
With a price 100.
For the 159,600.
This is the total price.
For the 8,400. And titanium used in production 7,900.
Used 7,900 pounds.
Required 1. Compute the direct material price and efficiency variances.
Therefore, as we can see here from our question, that we purchased 8,400 pounds, but we only used 7,900. Therefore, as we can see here, we do not have the same assumption as the web company example. Therefore, we need now to, it is just a little deviation from what we took. It is not a big deal, but we need to take into consideration that this amount, 159,600, was because of the 8,400 purchased titanium, not for the 7,900 that was used within the manufacturing process. Therefore, what is the requirement number 1?
Compute the direct material price and efficiency variance.
Therefore, the direct materials price and efficiency variance. When he says or when he asks for the price and efficiency variances, we all know that this is the level 3 analysis according to what we just did. Therefore, we need to know the actual quantity multiplied by the actual price. We need the actual quantity multiplied by the budgeted price. We need at last the budgeted quantity for the actual output, of course, multiplied by the budgeted price. Now, the actual quantity, of course, first of all, we need to understand that the price variance would be calculated according to the difference between the budgeted price and the actual price, correct? Therefore, we need to consider the price of our purchase of the 8,400 pounds. Therefore, the quantity that we are going to consider here as an actual quantity in order to get the price variance is the quantity that is purchased. Correct? Therefore, we are going to build up our analysis according to the 8,400 pounds that were purchased, because we purchased 8,400 pounds by a specific price, which is the 159,600 divided by the 8,400 pounds. $19. It would be $19. Of course, per pound. And then, when we are considering the efficiency variance, we will consider not the amount purchased, but the amount that were used in the manufacturing process. Therefore, we need to have two different analyses, two different perspectives. One perspective is to consider or to calculate the price variance according to the quantity that was purchased, and then we need to have another perspective in order to calculate the efficiency variance according to the quantity that has been used or actually used within the process. Any questions? Therefore, first of all, the actual quantity here is the 8,400 pounds multiplied by the $19, which is the same amount that they gave us, the 159,600. This is the actual cost. Now, in order to have only one variable in order to calculate our price variance, we need to change only the price. The quantity should stay the same. Yes, this is the quantity purchased, but we need only one thing to change in order to calculate the price variance, which is the price. We need the difference between the budgeted price and the actual price. Therefore, we are going to use the same quantity used here. Therefore, the actual quantity purchased is the 8,400 multiplied by the budgeted price, which was $22. Therefore, it would be $184,800. As we can see here, the only change between these two is because of the price, the difference between the $19 and the $22. Now, if we considered the 7,900 pounds to be the actual quantity here, we would have two variables, not only one variable. And we would not be able to calculate the price variance. That's why we considered the actual quantity here in order to calculate the price variance as the actual quantity that was purchased, not the actual quantity that was used within the manufacturing process. Therefore, the difference here between the two, of course, we should have incurred 184,800, but the actual cost was less. Therefore, we have a favorable variance by the amount of 25,200. Now, we need to consider the efficiency variance. The efficiency variance, as we all know, considers the difference between the quantities, between the budgeted quantity and the actual quantity that has been used within the process. Therefore, I'm not going to use now the 8,400 pounds. I'm going to use the 7,900 pounds, because the efficiency variance is concerned with the efficiency of our use for the direct materials within our manufacturing process. Therefore, we are going to consider, or we are going to have a perspective from the 7,900 pounds, not the 8,400. Therefore, here the actual quantity would be 7,900 because this is the quantity that was used. 7,900 multiplied by the 22. We are talking about the actual quantity. 7,900. You need to consider that this 7,900 is an actual quantity that is used within the process. But here, this is the budgeted quantity. I'm not talking about the budgeted quantity. I'm talking about the actual quantity. And in order to have our efficiency variance, we need to compare the actual quantity used within the manufacturing process with the budgeted quantity that should have been used within the manufacturing process. Therefore, 7,900 multiplied by 22, $173,800. Now, according to our flexible budget, we produced 800 bikes. Each bike uses up, as a standard, 8 pounds. This is the budgeted quantity according to our expectations, according to the 800 bikes. Of course, multiplied by the budgeted price, which is $22. Therefore, as we can see here, of course, 6,400 pounds multiplied by 22. Therefore, the amount is 140,800. As we can see here, we also have one variable. We have the variable of the quantity. As we can see here, this is the budgeted quantity, 6,400. We should have used 6,400 in order to produce 800 pounds. But instead, we use 7,900 pounds according to our actual use of the titanium. Therefore, as we can see here, the only difference between these two numbers is attributable to the quantity, or the difference between the budgeted and actual quantity. Therefore, we would have an efficiency variance. Of course, we should have incurred only 140,800, but we have incurred higher costs, therefore unfavorable efficiency variance by the amount of $33,000, which is an efficiency variance.
Come from the same quantity.
What do you mean? The 7,900 is the amount of titanium that has been used to produce 800 bikes, correct? Therefore, we need to compare this actual amount of pounds with the budgeted amount of pounds that should have been used to produce the same 800 bikes. According to our standard, we need to use only 8 pounds per bike. Therefore, we need to use 6,400 pounds in order to produce the 800 bikes, correct? But we have actually used how much? 7,900. Therefore, the difference between these two numbers is the difference between the actual quantity used and the budgeted quantity that should have been used in the manufacturing process. As we can see here, we need to have two perspectives. The price variance would be calculated according to the quantity that has been purchased, but the efficiency variance would be calculated according to the quantity that has been used. Because, as we all know, the price is according to what we purchase, correct? Therefore, the quantity that should be used is the quantity that has been purchased. While as the efficiency variance is because of the change in the quantity that has been used within the manufacturing process. Therefore, we need to consider the quantity that is used or that has been used within the manufacturing process itself. Therefore, the actual quantity multiplied by the budgeted price would be now divided onto two columns. The first column is considered for the purchases, and the second is for the usage. Always, when we have direct materials purchased different than the direct materials used, we need to consider these two perspectives. Any questions? So, if we need to make, or if we need to journalize our variances, and we need to journalize the information here according to this example, what is the different journal entries that we need to perform? First of all, of course, we are only talking about the direct materials. Therefore, we are going to consider the purchases of the direct materials and then the use of the direct materials. But if we are talking about the direct manufacturing labor, we do not have two different transactions. We only have one transaction. Therefore, when we purchase direct materials, according to what we took in cost accounting 1, we would debit the direct materials control and we would credit cash or accounts payable. Of course, according to our standard costing, we said we are going to debit the direct materials according to our standard price. What was the standard price? $22. We purchased 8,400. Therefore, we should have, or we will recognize the transaction or the increase in the direct materials control by the amount of 184,800. How much is the amount that should be paid to the supplier? Only 159,600. Therefore, the accounts payable or cash would be recognized by the amount of 159,600. As we can see here, the debit does not equal the credit. Therefore, we have a variance. What is the variance? It is a favorable variance, and we said that favorable variances are considered as revenues. Therefore, they should be credited. Therefore, we have a direct materials price variance by the same amount that we have calculated, 25,200. This would be our journal entry in order to journalize the purchase of these materials. Now, let us see what is the journal entry in order to journalize the use of this or these direct materials. Of course, as we took in cost accounting 1, if this is a direct material, therefore the work in process should be debited. And of course, we used up some of our assets, which are the direct materials. Therefore, the direct materials control should be credited. Therefore, we said, according to our example, according to our question here, according to our standard costing, we are going to recognize that within the work in process, the amount that should have been incurred, the amount according to the standard itself. Therefore, we are going to incur the 140,800 according to our budgeted quantity of 6,400 pounds. This is the expectation, or was the expectation. Therefore, the work in process is 140,800. And of course, the direct materials that has been used, as we can see here, it is the 173,800 according to the 7,900. We are not talking about the 184,800. Why? Because this was the amount for the purchase and this was the amount for the use. Therefore, we need to consider here that this journal entry is because of the using of the direct materials. Therefore, the direct materials, according to the standard price, is 173,800. Of course, as we can see here, the debits does not equal the credits. Therefore, we have a variance. Of course, we have unfavorable variance. Therefore, it should be debited because we are going to consider it, or we are going to treat it as an expense account. Therefore, direct materials efficiency variance by the amount of $33,000. Any questions? Any questions? Number 2.
What factors can explain the variance? What factors can explain the variance identified in requirement 1? Could any other variance be affected?
So what do you think? Could you please repeat the question?
What factors can explain the variances identified in requirement 1? Could any other variances be affected?
Therefore, what are the reasons for this 25,200 favorable price variance, and what is the reason of the amount of 33,000 unfavorable efficiency variance? What do you think is the reasons here, or the causes? Of course, as we all know, this is called the price variance. Therefore, the favorable variance is because that we was able to achieve a price that is lower than the budgeted price by the amount of $3, as we can see. Therefore, this price variance is because of the difference between the $3 between, of course, the budgeted price and the actual price. Correct? Of course, as the question said or stated, that the new purchasing manager switched suppliers, switched from a known supplier that he or that the organization used to make business with onto another supplier, which is online supplier. Therefore, the difference here was because of this change between the suppliers. Now, as we can see here, the 33,000 unfavorable efficiency variance was because of what? Because of the difference between the quantity that should have been used and the quantity that was actually used. Therefore, we should have only used 6,400 pounds of titanium, but actually we used 7,900 pounds of titanium. This would be the reason or the cause of the second variance, which is the efficiency variance. As we can see here, it is unfavorable. Why? Because we used more quantity than expected. The other part of the question, do we think that these variances would affect any other variances? And excellent. It could. For instance, the use of more materials could increase the number of hours that has been used within the manufacturing process, as we took in the web company example. Therefore, of course, in our variance analysis, we need to consider the relations between the different variances within the variance analysis. Therefore, yes, we might have an unfavorable efficiency variance in the direct manufacturing labor because of the use of the greater use of quantity of direct materials. This is only one of the effects that could be in place because of this unfavorable efficiency variance. Any questions? Number 3.
Was switching suppliers a good idea for better bikes? Explain why or why not.
So what do you think? Was it a good idea to switch suppliers? As we can see here, switching suppliers gave us a favorable 25,200 price variance. Correct? Therefore, is switching the supplier a good thing or a bad thing? And you did not, we are just saying that we need to consider all variances. Therefore, from your point of view, you only considered the favorable price variance and you did not consider the efficiency variance. Therefore, we need to know whether this efficiency variance of using higher amount of quantities within our manufacturing process was because of the decrease in the price. Maybe the price decreased from $22 to $19 because the titanium or the direct materials were of lower quality. Therefore, lower quality would explain the more use or the higher use of the direct materials. If this is the case, we do not know. Therefore, we need to analyze the cause of this unfavorable efficiency variance and see what is the real cause of this efficiency variance. Is it because of the lower quality? If it is, therefore, is it better that we changed or switched suppliers? As we can see here, we attained a 25,200 favorable price variance, but at the same time we attained 33,000 unfavorable. The unfavorable variance was larger than the favorable variance. Therefore, no, the switching of suppliers from a known supplier that we used to make business with to an online supplier was not a good idea. Of course, this analysis is according to the assumption that this efficiency variance, unfavorable efficiency variance, was because of the lower quality of the titanium that has been purchased. Of course, if this is not the case, maybe the lowering of the price was, or the switching of the suppliers was a good idea. Any questions? And we need to consider another thing, that this favorable price variance was because of the whole quantity that has been purchased. And this efficiency variance is only was calculated according to the quantity that was used. Therefore, if we are considering here the same quantities, the unfavorable efficiency variance would be more than 33,000. Therefore, the difference also between the unfavorable and favorable variances would be higher than we just said or than we expect. Because the 33,000 unfavorable efficiency variance was because of the actual quantity used, while this 25,200 was because of the quantity that has been purchased. And as we said, according to our example, according to our question, that the amount that was purchased was higher than the amount that was used. Therefore, we would have, or this efficiency variance in this case is understated. And we need to consider this if, of course, this efficiency variance was because of lower quality in our titanium. Any questions?